so much to talk about, Mark, in the last 24 hours, whether that's the Trump tariffs and what that's doing to markets, or whether that's what's going on here in Europe and in Germany. So German plans to spend more, to change the constitution to allow themselves to spend more, really upsetting the bond markets to some degree. We see yields going higher in Germany, but across Europe as well. Your takeaway from this bond market response?
Well, I think this is a very important dynamic because it upends the very much consensus narrative going into the year. Going into the year, every investor was bullish dollar and almost every investor was bearish the euro. It was just seen as a stagnant, sluggish economy with no end in sight. That narrative is being ripped up. With Germany planning to spend, the idea of fiscal injection coming into the continent is changing the story there. And it's at a time when the US is being deeply undermined by its own leadership, and therefore people are looking for alternatives to the dollar. So I think that this move happening in German yields is particularly positive for the currency, because it's not like Germany is going to have a problematic debt situation. So it's only a positive rise in yields when it happens in German yields. And therefore it's a really, really big boost to the currency and very much a positive that can overall sustain for much of this year.
Mark, the price action in the US session yesterday was absolutely wild. What is the takeaway from yesterday? What is the lesson that we should learn, and what does it tell us about what is about to happen?
I think investors are retaining way too much hope, putting too much credence into the idea that Trump once had a book called The Art of the Deal, and therefore everything he does in tariffs is negotiations. He has been extremely consistent, and I think people underestimate him by underestimating the coherence and consistency of his message. He loves tariffs. He thinks they're the greatest policy tool ever, and it's about revenues. He wants revenues from tariffs to thereby cut taxes on American corporations and American people. He is very, very determined that some large tariff revenues need to come in. For large revenues, they need to be imposed on one of the major trading partners in the US and at a high level. Now, exactly where they will end up being imposed is hard to know, but the end game will be months from now that US will have a much higher average tariff rate than it has right now, and therefore US equity investors are in denial of that fact and clinging on to every promise that he'll retract or change plans like Lutnick promised yesterday.
Yeah, but Mark, if you bring the two together, if Trump loves tariffs so much and he brings tariffs on Europe, how do you weigh that against all the optimism about more defence spending?
Yeah, I think that's ultimately going to be a problem for Europe. And my theory is, and it's hard to know exactly what happens with the US administration, to me, though, Europe will be one of the big victims of the US tariff policy. But I think that ultimately that's not the main dominant dynamic right now. I think what's upending the narrative bigger is the increased spending out of Europe. So I think we've got more positivity to go on the European side, particularly through the currency.